Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories that we're tracking this afternoon. Markets build on gains after a solid start after a big rally in U.S. equities overnight. PSU banks, FMCG, capital goods, autos lead the charge, while healthcare lags.
Invesco sells a little over 5% of its over 10% stake in Z Entertainment via block deal. A lock-in on further sales and optimism over the merger with Sony fueled a rally in the stock. Elara Security estimates cost synergies of up to 600 crore rupees in Z post the merger.
Newgen Software jumps after a good second quarter performance with a strong sequential improvement in EBITDA margins.
PSP projects in Maharashtra Seamless slump post their second quarter results. A good set of numbers from Maharashtra Seamless fails to impress investors, and there is also a buyback announcement that has been cancelled this time around, but PSP plummets on a dismal show with a 41% drop in net profit. All right, those are the top headlines that we are tracking on Midcap Radar for you. Numbers coming in thick and fast. While that is something that we are tracking, markets are looking very strong. We have Nifty sitting with gains of 180 points. Bank Nifty is the one which is again fueling this rally. That index up 1.2%. The advance decline ratio comfortably in favor of the advances. That one is at 2 stocks in advances versus 1 stock in the declining trend. So looking good for the markets as far as overall trend is concerned. And we have numbers coming in from Gujarat Fluorochemicals as well, and the numbers look really strong. So margins at 36.6%, much better than estimates of around 31.7%. Revenue growth also much higher, so it is a definite beat as far as Gujarat Fluoro's numbers are concerned. But Reema, looking good for the markets today.
Absolutely. So let's talk about the market technicals and see where we are headed, because right now we've not managed to conquer that 50-day moving average, which is 17,490. We're hovering around that level, but we're not able to break past it conclusively. Dharmesh Shah, the Assistant VP at ICICI Securities, is now with us on the show. Dharmesh, how much of a resistance level is this 50 DMA at 17,490 thereabout, which is where the markets are hovering? And what's the trade that you would recommend?
Yeah. Good afternoon, Reema. Yes, definitely. I think so. The market seems to be facing some bit of a resistance around the upper band of the channel, which is around 17,500. But we believe, I think so, the bullish stance still remains to be intact. I think so. Any dip towards 17,300, 350 should be looked as a buying opportunity, because eventually we expect, I think so, market to eventually gradually take past the level of 17,500, and we should be heading towards 18,000 level in the coming week. So overall, I think so, the outlook remains to be the positive. If you look at the market, after all this negative news globally, we have been maintaining the 200-day moving average. So all negative news seems to be getting priced in. We believe any fall or any dip in profit booking towards 17,300, 350 should be looked as a buying opportunity for a target of 18,000 in the coming weeks. So overall,
don't get that dip, Dharmesh. What if you don't get that dip towards levels of 17,300? At this juncture, currently, for all our viewers who are watching you, is there a trade on the Nifty right now or on the Nifty Bank?
Yeah, if you look from the intraday perspective, definitely around 17,440, 450 is a good level. After 230, we see and some bit of a minor profit booking should be looked as a buying opportunity. So around 430, 460 is a good level to re-enter into Nifty 50 from the Nifty futures perspective. Yes, definitely 530, 540 should be the immediate target for the Nifty going forward. So even after, I believe, I think after 3 o'clock, if we maintain 17,480, 490 levels, we could see more of a short covering in the Nifty in the last half an hour of the session. So I think so, yeah, definitely, I think so around 460, 480 is a good level to re-enter.
Okay, all right. In that case, what would your individual technical picks be?
Yeah, so on the mid-cap side, we remain to be positive for the PSU banks as a whole. As if you look at the PSU index banking, has witnessed a breakout of the last 4 years channel breakout. So falling channel breakout indicating, I think, the structural change is happening in the PSU banks. Definitely, we have seen a good catch-up exercise in most of these large caps like State Bank of India, Canara Bank. We believe the catch-up exercise should begin in the second run of mid-cap banks, where Union Banks remains to be our top pick. The stock seems to be witnessing a flag breakout, and if you look at the pattern since 2020 to 22, I think so it's a purely a cup and handle type formation the Union Bank. So I think so the major negative news seems to be getting priced in Union Bank. With strong volumes, we expect the stock to head towards 52, keeping a stop loss of 39. Second stocks where we remain to be positive is Bharat Forge. Now, Bharat Forge is if you look at the auto ancillary, it has been the clearly outperformer in last corrective phase. And Bharat Forge is a good proxy to a Class 8, US Class 8 trucks and more of a defense space. I think so for Bharat Forge, a strong buying demand most of the times have emerged around the 52-week EMA. We expect the stock to head towards CY21 high, which was at 850, keeping a stop loss of 734. So Bharat Forge and Union Bank on the mid-cap side remains to be a top.
Thank you very much for that. Those were a few ideas. Let's talk about mid-cap movers. Vivek is here to take us through that list. Vivek.
Well, good afternoon. It's a session where you're actually seeing quite a lot of traction as far as the mid-caps are concerned. First, let's address some of the results that came in today's trading session. First on our list is GMDC. The company came with a reasonably good set of results, mostly along expected lines, but EBITDA margins have expanded quite sharply. Margins coming in at a little over 30% this time around versus just a 6% last time around. When you're talking about Newgen Software, this particular company, again, on a sequential basis, a strong uptick seen as far as profitability was concerned. On the back of that, both of these stocks are doing very well in the session. Now, coming to some of the other stocks that are doing quite well, Gujarat Alkalis today, was perched much higher. Very, very strong volume seen. This soda ash maker is seeing continued traction in today's trading session, and volumes here are significantly higher. We're also looking at Zen Technologies. Today, this particular company is seeing very strong up move on back of very strong volumes as well. BHEL today, clear outperformer. Couple of days ago, you had a brokerage, DAM Capital, actually upgrading this particular stock. They believe that as far as this capital goods company is concerned, India's need to increase coal power plants is something that will give increased prospects as far as BHEL is concerned. Now, the new listing, Electronics Mark, saw a bumper listing yesterday, continues the up move today, up perched at the upper circuit as well. On the other hand, if you're talking about some of the stocks, especially in the banking space, PSU banking stocks are doing very well, but some of the other banks too, after strong results from Federal Bank, DCB Bank as well as J&K Bank today moving up on strong volumes. Moving to the losing section, PSP projects after a very dismal set of numbers, sulking in the session down almost 10%. J. Kumar Infra, this particular stock has been underperforming this week. The company has seen IT raids across its offices, and on the back of that continues its losing streak. Angel One is, as well as Max Healthcare, are some of the other stocks that are doing quite poorly in today's trading session.
Thank you very much for that. Just a word, on Newgen Software. Now, this, is a products company, so you typically look at it on a year-on-year basis. Initially, when the numbers came out, everyone looked at the quarter-on-quarter numbers, where the margins went up from 10 to 16%. So therefore, there was a big surge in the price. The intraday of Newgen Software, let's get that up for you on your screen. But then, once you realize that actually you're supposed to look at it on a year-on-year basis, and there the margins have fallen from 25% to 16.5%, which is why the euphoria in the stock to some extent has fizzled out.
Okay, so usually we think of IT companies in quarter-on-quarter, and
exactly.
Maybe that's why there's fall in the stock price from the highs. But with that, we'll slip into a short break now. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back. You're still tuned into Midcap Radar. Well, PSU banks, they're surging in trade today. We also have a bullish note coming in from Haitong Securities, which says PSU banks are better placed with asset quality and stronger balance sheets. Abhishek is telling us more about that note.
Well, to begin with, Haitong Securities has written a note on PSU banks saying that PSU banks are now better placed with respect to asset quality, which is healing, and relatively better balance sheet. So they expect the stocks under coverage to report a CAGR in terms of loan growth over the next few years at 11.5% versus 11% loan growth that they had in FY22. So coverage ratios are higher, that is PCR, provision coverage ratio, anywhere in the range of 65% to 78%. This is without the technical write-off, and CRAR, that is capital adequacy ratio, is also strong, around 13.5 to 16.5% range. So improving growth trajectory and reducing credit costs would augur well for return ratios to improve ahead. So worst is behind with respect to asset quality woes. They expect a slippage ratio to be around 1.6% between FY22 to 25. So they expect PSU banks to report a strong earnings momentum, a CAGR of around 20% 23% over the next few years, with ROAs close to touching about 0.9%. So they have initiated coverage on the likes of Canara Bank and Indian Bank, while across their coverage universe in terms of PSU banks, they have an outperformance rating. Back to you.
Okay, thank you very much for that. Heritage Food numbers are up for you on your screen. Revenues have gone up by 22% on a year-on-year basis, but the stock is sulking in trade, currently down 3.5%. And that is because despite a rise in revenues, the absolute EBITDA has seen a pretty sharp fall. Margins too are now just at 4.9%, practically halving. But let's talk about CanFin Homes. That's in focus post its earnings. There was a slight rise in the operating profit on a quarter-on-quarter basis, even as the net interest margin remained flat. My colleague Prashant Nair caught up with CanFin Homes MD and CEO Girish Kauski and the Deputy MD Amitabh Chatterjee, and he began by asking them about the quarter gone by and how they see growth going ahead. Listen in.
CanFin Homes reported numbers, and we have Mr. Girish Kauski, Managing Director and CEO, and Amitabh Chatterjee, Deputy Managing Director of the company, joining in to take some questions around this. Gentlemen, great to have both of you here. Mr. Kauski, I have to start with you, and I'll come to the numbers in just a bit, but this is the first time we are speaking after the announcement that you'll be leaving the company, I mean, actually this week. So this is your last week. So I have to ask you the question, what happened? Why are you leaving?
For better opportunity.
The last time we spoke with you, sir, which is not very long ago, but this is the first time we're speaking to you after the announcement that you're leaving. At that point, during our last conversation, you said that you are, and we'd asked you this question, and you said, I'm there till September 2023 at least. What changed?
So at that point in time, I had that thought. I think subsequently, I got a good opportunity, so I thought I should move on.
Would you like to tell us where to, sir?
Not at this point in time. Probably, after a few days or a couple of weeks, it will be in public domain.
You would understand, I imagine, all the sort of confusion and nervousness it caused when the head of a financial institution suddenly decides to leave. I mean, did that play on your mind over the last sort of month or so since the time of the announcement?
I think this is quite common, not only in financial space, in all space, whether it is IT, pharma, or financial services. I have put in 3 years, here, so it's not sudden, and you have seen, at the top, people do leave after a particular milestone, could be 2 years, 3 years, 4 years. So I don't think so. This is sudden. My term was still 5 years. But at that point in time, I had thought, I would continue till the end. But since I had a better opportunity, I thought I should move on. So it's not sudden. And this is quite common, across all industry, not just financial industry.
No, absolutely. But point taken. Mr. Kauski, what we also understand is that the term, the notice period is for 3 months, but you're leaving slightly early. Is that correct, sir?
Yeah, so it will be a little over 1 month notice period that was mutually agreed between me and the board members.
Okay. I have to ask you this, and I hope you'll understand. Was there any disagreement with the Canara Bank management on how the business was being run or how classification, etc., was being done at all?
If you look at last 3 years, I think every single quarter CanFin stands out. If you see within the industry, CanFin has performed on all fronts. And this is not there for everyone to see, and it's in public domain. As far as Canara Bank and CanFin Homes is concerned, we had a very cordial relationship. They've been a very good parent. They supported us very well. And me individually as an MD also, I got a lot of support from Canara Bank. So it is not because of any other reason. It's only because of my decision since I got a better opportunity.
Got that. Fair enough. I had to sort of get that out of the way. Now let's come to the quarter, Mr. Kauski. And Mr. Chatterjee, I'll sort of come to you as well. I want to start with the standard assets provisions, Mr. Kauski, which have come in at 33.5 odd crores. As compared to the growth that we've seen in the book, the loan book, this does seem a little higher. Can you explain this?
So actually, we have now migrated fully from IRAC to ECL model. So what has happened is about 21 crores from NPA provisioning has moved to standard. And that is the reason it's basically balancing within the overall provision amount. And therefore, you will see standard provisioning going up. Otherwise, if you see the slippages this quarter, it is hardly 3 crores. I think we have recovered more than what it has slipped. And if you look at what slipped into NPA, it's actually 1 crore, and overall we have provided 3 crores. So the difference in the provision amount is only because of complete migration to ECL model.
Okay. Got that. So net NPA, Mr. Kosgi, rose by 23.5% quarter on quarter, but we've seen a write back of 20 crores, and the PCR has dropped as well. Can you explain that?
So it's linked to the earlier discussion, what I mentioned. So what has happened is since we have withdrawn 21 crores from NPA and it has gone to standard, so my net NPA has increased. On a like-to-like basis, it would have been 0.28 against the last quarter of 0.3. So this increase from 0.3 to 0.35 is only because of the change, because of moving completely to ECL model.
Okay. Mr. Chatterjee, would you like to add to that, sir? To that point?
Sir, actually, we have to do IRAC provision and as well as ECL provision. Whichever is higher, that has to be provided. This time it was ECL provision, so we have provided the provision as per ECL model. And going forward, I think we'll be providing provision as per ECL model only.
Right. No, I'm saying I'm asking whether you will need to provide more in the coming quarters to take the PCR up.
No, it depends upon how our book shape up, but I don't find any reasons to provide extra provision going forward.
Just to add to what Amitabh said, see, if you look at our asset quality, it's been pretty stable for last many quarters. And even in this quarter, nothing has changed. Even the slippages have been very less, much lower than the earlier quarters. It's only because of completely migrating from IRAC to ECL, you have seen that difference of net NPA going up. Otherwise, talking about next few quarters, asset quality is it's very strong, and GNPA has been decreasing. It's also very stable since last many quarters. So even the credit cost has been quite low. So going forward, we don't see any additional provision which might be required.
Credit cost is entirely towards standard assets, Mr. Kosgi?
So credit cost for this quarter is about 0.04.
Okay, nothing. All right. Fair enough. Would Mr. Chatterjee, margins, would you like to kind of talk to us a little bit about that? I think there has been a slight moderation in margins.
I think margins will be maintaining at around 3.5% in coming days, and spread will be at around 2.5%.
3.5% for the full year. That's broadly what you're aiming for?
Yeah, it will be around 3.5%. We'll maintain the margin. In fact, we may increase it also.
All right. What about disbursement growth, which actually has come in strong, Mr. Chatterjee? Can you take us through what happened? So, a little bit of qualitative detail?
So disbursement generally happens during third and fourth quarter, and we are in line with our projections. So I think third and fourth quarter will be disbursing as we have done in past. And so disbursement will be quite good during third and fourth quarter.
Mr. Kosgi, would you want to put any numbers to it? I mean, what's broadly the idea?
See, actually, if you compare H1 of this year and H1 of last year, we have shown a growth of 28%. Now, last year, quarter 2 was an aberration for the simple reason quarter 1 we had COVID. And therefore, obviously, you would have that spillover effect from quarter 1 to quarter 2, which means last year, quarter 2 was on a large base. So on a large base, we have increased, though it's marginal. And therefore, if you compare H1 of last year, we have grown by 28% on disbursements, and the book growth is 22%. So which means the growth story is there and it's very strong. And H1 is going to be far better than H1 of this year. And this would continue for next few years. As I mentioned earlier also, we are in a sweet spot. The entire industry is in a sweet spot, and we are pretty aggressive on growth, and this growth story will continue for next 3 to 4 years.
Mr. Kosgi and Mr. Chatterjee, thank you very much, both of you, for joining us here on CNBC-TV18. It's a pleasure, both of you. And Mr. Kosgi, as you said, we will have the opportunity to speak with you in another role. I think you said a few days, sir?
Yeah, a few days.
All right. We'll wait for that. Thank you very much, both of you. Appreciate it.
Thank you. Thank you.
Okay, all right. That's the management of Canfin Homes in conversation with Prashant Nair. With that, we'll step into a short break now. We'll get to more on the markets and stock-specific action on the other side. Stay tuned. Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18. Well, Praj Industries, the numbers have come out. Strong revenue growth of 65%. The stock is higher by 0.7%. Looking good this time around for Praj Industries. We'll have to look at the EBITDA number also. It's up around 46.5% to come in at 67 crore rupees. The stock, though, has come off from the highs of the day. The stock was doing well in last couple of trading days. For the markets, we have come off slightly from the day's high, but Nifty is sitting with gains of 150 points. It's the Bank Nifty, which has also come off from the highs. So that index is at 400 points for you. A couple of stocks in the Nifty pack, which are at the day's high. So we have something like Tata Consumer, which is surging. We have Eicher Motors as well, which is at the day's high. And SBI is the other big name, which is doing well in the Nifty pack. So whole host of numbers coming in, a lot of stocks that are in focus. We'll keep covering that for you. But for now, we'll take your leave on this edition of Mid-Cap Radar Mutual Fund Corner when we return.